Today, we are diving into the story of maybe the most secretive and, without a doubt, the most successful investor in modern history. I'm talking about Jim Simons, a man who became the greatest moneymaker in finance, but for decades, you'd probably never even heard his name. He's the man who solved the market. So, how on earth did he do it?
Let's start with this number, 66%. Get this. That is the average annual return his Medallion fund has posted since 1988, and that's before fees. To give you some context, that number absolutely blows legends like Warren Buffett and George Soros out of the water. It's not even close. We're talking over $100 billion in pure trading profits. Just unbelievable.
So that brings us to the big mystery, right? How did a mathematician, a guy who spent his life in university classrooms and top-secret code-breaking facilities with literally zero financial training, build an automated system that could print money on a scale nobody had ever seen before? That is the puzzle we are going to unpack. Well, the answer to that multi-billion-dollar question starts somewhere you might not expect, not on Wall Street, but deep in the world of Cold War espionage. See, to really get how Simons solved the market, you have to understand that his greatest strength was that he was a complete and total outsider. He didn't see the market as a collection of companies and stories. He saw it as a massive, complex code, just waiting for someone to finally break it. I mean, just look at his career path. It's not your typical Wall Street resume. He starts out in pure math at MIT, then he's at the Institute for Defense Analysis, literally cracking Soviet codes during the Cold War. After a run as a celebrated academic, he just walks away from it all at age 40 to start trading. His foundation wasn't in balance sheets. It was in finding hidden patterns that no one else could see. And this right here, this captures the absolute core of his revolution. On one side, you have your traditional investor. They're reading the news, analyzing what a company does, trying to build a story. Simons and his team, they were on a completely different planet. They believed all of that was just noise, distractions. For them, the only thing that mattered was the raw, historical price data. Everything else was irrelevant. Okay, so if the market is just a giant code, how exactly do you crack it? This wasn't about gut feelings or hot tips. It was about pure mathematical firepower. And their weapon of choice was an approach that would end up changing finance forever: quantitative trading. Quant trading sounds fancy, but the basic idea is pretty straightforward. It's about using massive amounts of computer power to crunch through mountains of data, looking for tiny little patterns, what they call anomalies, that are statistically significant and tend to repeat. The goal is to build a model that can predict, with just a slight edge, which way a price is about to move. And they weren't looking for the obvious stuff. They were hunting for what you could call ghosts in the machine. These were faint, weird, recurring patterns that were so subtle a human trader would never notice them. You know, maybe a particular currency tended to dip by a fraction of a penny on rainy Tuesdays, or a specific stock wiggled in a predictable way for 3 minutes after an announcement. They didn't even need to know why it happened, just that it happened reliably. And this is where it all clicks into place. A quote from Elwyn Berlekamp, one of Simons's key partners, really says it all. If you trade a lot, you only need to be right 51% of the time. See, they weren't trying to hit home runs on every trade. Their system was built to make thousands, sometimes millions, of tiny little trades, and they only had to win on just over half of them. It's the casino model. If you have a small, consistent edge and you play the game enough times, the house always wins. Now, having a revolutionary strategy is one thing, but building a team and a system to actually pull it off, that's a whole other challenge. To make this work, Simons had to create a company, Renaissance Technologies, that looked nothing at all like a typical Wall Street hedge fund. It was a total black box. So what was the secret recipe inside this place? First, the people. You forget about hiring finance MBAs. Simons hired astrophysicists, cryptographers, computational linguists, people who had no preconceived notions about how markets should work. In fact, he preferred it if they had zero Wall Street experience. Inside the walls, it was all about radical collaboration and sharing every idea. But to the outside world, it was obsessively, notoriously secretive. And every single decision was driven by data, not ego. This quote from Robert Mercer, a crucial computer scientist who joined from IBM, basically became the company's mantra. They were data hoarders on an epic scale. They collected everything they could find: decades of weather patterns, old newspaper articles, you name it. They believed that somewhere in all that data, there were more predictive signals, more ghosts to find. A money-making machine this successful couldn't stay a secret forever. The crazy profits being generated inside Renaissance didn't just make its people rich. The entire methodology behind it kicked off a revolution in finance, with ripple effects that spread far, far beyond Wall Street.
And the scale of this shift is just staggering. Renaissance proved that the quant model worked, and once the secret was out, the rest of the industry raced to catch up. Back in the early 90s, these kinds of strategies made up maybe 5% of trades. By 2019, it was estimated that a third of all stock trades were driven by these kinds of models. Simons didn't just play the game, he completely rewrote the rules.
Of course, this new paradigm also created unbelievable fortunes. Key figures at the firm, like the previously mentioned Robert Mercer, used that wealth to become some of the most influential political donors in the United States, playing a major financial role in the 2016 presidential election. Now, Simons himself took his fortune down a different path. He and his wife Marilyn have become enormous philanthropists. They started Math for America to support teachers, and they are now the largest private funders of autism research in the world, pouring hundreds of millions of dollars into understanding its genetic roots. So in the end, Jim Simons really did solve the market by treating it like a scientific problem. But his legacy is a complicated one. He unleashed a powerful new force on the world. And as these automated, lightning-fast algorithms he pioneered come to dominate global finance, we're left with a really profound question. As algorithms control more and more of our world, are we building a more stable financial system, or are we creating a new kind of fragility we don't even fully understand yet?